As the idea of rate cuts slowly drifts away from 2024, what exactly does this mean for housing and you as a buyer? I mean, if you listen to the speculation that's out in the market, higher rates for longer means prices will drop. Maybe even a real estate bubble. Well, that's simply not true. I want to go through and highlight what's happening in today's economy and the demand and opportunities that you have to still jump in. But before I do, I want to ask a huge favor, because this means the world to me. If you could hit that subscribe button and the like, and make sure to comment down below what your thoughts are, because this helps the algorithms reach more buyers just like you. So let's jump into the economy, because it's not acting as we wanted. I mean, it's just not. That's the bottom line. We came out of 2023 exuberant and excited for 6 rate cuts in 2024. Never mind the fact that the Fed actually never said 6, they said 3. Ignoring. But we were exuberant. The economy was going to take us into a soft landing, and we were going to see rate cuts and lower interest rates and a housing boom. Well, all of that changed, and it changed pretty quickly, because we saw the economic reports showing data was strong in January and February. And now March's reports have come to light, and the BEA is saying that productivity is up. Workforce participation is strong. Corporate profits are at a record high, and we've already talked for eons about the stock market continuing to break new records, as well as cryptocurrency. Meanwhile, the unemployment numbers remain below 4%. In fact, for the 26th straight month in a row, it slid back from 3.9% to 3.8% on the first Friday of April, showing March's data. Job growth surprised us all, coming in at a strong 303,000 jobs created in the month of March, far exceeding expectations of only 200,000. I mean, this was the strongest we'd seen in 10 months and the 39th month of growth. The labor force surged 469,000 workers. 65% of the total population increase in 2021 and 2022 was due to immigration. I want to put a number around that for a minute. We actually saw 2.6 million immigrants coming into the United States legally, or the population of Chicago. Well, with all that, wages are still moderating, but still over 4%. As long as there's people eager to find jobs, it's going to keep wages higher, even though long-term trend is coming down. That over 4% is still a strong, healthy job market. It's actually sitting at 4.1% for March. Compared to the 3.2% inflation numbers right now, people are feeling a little spendy. All of this leading to questions on if the Fed will drop the Fed rate at all in 2024, and has newscasters forecasting a drop in home prices with the continued higher for longer interest rates. But what they don't realize is that consistency brings the ability to take action. I mean, think about it. It dispels uncertainty. Rates have been hovering right below or right above 7% since the beginning of February, bringing in more home buyers. Regardless of the fact that it might have a 7 handle, it gives me an interest rate that I can plan, that I can get pre-approved, that I can go under contract and close with. Millennials are now driving the bus, making up 38% of all home buyers. They've taken over as the largest demographic of all the buyers in 2023. 32% were first-time home buyers. Remember, we had hit a high in 2023 interest rate-wise of 8%. Yet, 32% of all the homes purchased were done so by first-time home buyers. This is up from 26% the year before. Of that group, millennials comprised of 75% of the demographic. With sellers locked in with low interest rates, we saw an estimated 1.3 million fewer homes listed for sale from quarter 2 2022 through quarter 4 2023. 2023. 1.3 million fewer homes for sale, yet the first-time home buyer eagerness and appetite was up in 2023, while interest rates were 8%, which just simply shows to the strength of demand. Well, fewer homes to buy, and the largest age of Americans today being age 30 to 34, i.e. the millennials, and millennials eager to buy homes with first-time home buyer numbers up, does that scream home prices are falling to you? I mean, it doesn't to me. It's actually quite the opposite. Another trend that we're seeing that will further constrain inventory is that 78% of baby boomers simply do not want to move. 54% of them say because it makes more financial sense. I mean, of course it does. Many of them don't even have a mortgage, and those that do have a mortgage interest rate well below the current market rate. 51% of them say because they like their home, and 21% because prices are too high. If you're a baby boomer listening to this, millennials need your home. I mean, this might be the time to consider your options. Have you thought about moving into the right size home in the perfect location and never having a mortgage payment again? Sounds like it's too good to be true. It's simply the new reverse mortgage options for 2024. And if you're thinking about it, we need to talk. Guys, right now, with an uncertain economy, political environment, and housing market, it's okay to feel overwhelmed. Just don't let that feeling keep you from exploring your options and getting clear on where this market is headed next. Because knowledge is power, and it's the reason my team spends hours not just digging in to help you finance a home, but strategically planning how real estate can offer you options to thrive. If you'd like to explore your personal options deeper, all of my team's contact information is down in the comments below. I'm Nicole Rueth with the Rueth team. I'll see you back next week for another market update.